Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. This is the last update of March. It's the 30th. Let's get started with the charts. We're currently trading at about 102.13 this morning. You can see we're right in the middle of our trading range. We had a nice upward gain over the last month or so, and then rates have kind of started to flatten out a little bit, as you can see here. We're currently seeing support at about 101.90. This trading day before yesterday kind of created that support, but you could see it was already kind of tested here on Monday as well. So that's going to be our new level of support, 101.90. I was hoping it'd be 102, but we did dip down a little bit below it. Our resistance is going to be up above us at 102.40. You can see we touched that here day before yesterday as well. So 102.40 resistance. Reports really weren't too crazy today. Pretty calm day. GDP came out kind of as expected. They've revised their numbers. Jobless claims were a little worse than expected, which did help bonds slightly, but nothing worth writing home about, guys. Not a lot in the news right now either. Everybody kind of knows when the Fed increased the short-term rates, that it actually improved the bond market, the long-term rates. So we talked about that in our last video here last Thursday. So to kind of quantify where we're at, Freddie Mac in the month of February reported the average interest rate to be 4.17% at half of a point. The source is down here for you guys. And, we were trading February about 102.30. So we're not quite as good as where we were in February. But if the average consumer was paying a half a point back then, we're about 17 cents worse. So they may be paying about closer to 5/8 of a point for the same rate. Average consumer getting a normal, conventional loan. So here's where we're at. What is the forecast? Well, we definitely broke out of our upward trading channel. We're definitely not in a downward trading channel. So we're really now trading in a flat trading channel. One of the analysts actually noted, he was a little bullish on bonds here yesterday and day before yesterday, but we broke out of that upward projected trading channel that he was bullish on. So, he's kind of gone a little neutral now. So is the other analyst that I follow. So neutral just means we're probably going to see some pretty flat trading. So it's anybody's game at this point. If we're going to be trading, by the way, we hit my range forecast from last Thursday to this Thursday. We were right on there. So anyway, but we are right in the middle of our trading range, guys. So it's anybody's game. It's just going to be dependent on the reports that are coming out. I would say, if you decide to float, you have room to maybe gain a quarter point in fees, or you have room to lose a quarter point in fees if trading goes as anticipated. But it's anybody's game. Anything could happen. The safest thing to do is lock. But that's where we're at with forecast. We're right in the middle. And it's a hard call right now. So that's a bit for now, but don't forget to comment. We'd love to hear from you guys. Any questions on what your projections are, throw it down below, and everything likes to be liked. So does this video. You guys know what to do. And if it's your first time on the page, top left, click that ugly guy. That'll get you subscribed. You can always turn it off after you're done getting your mortgage. And at the top right, that's Mortgage Bonds 101. So if you look at these charts and you're like, hey, this is not making sense to me, it's okay, it's a little funky, go over to the top right, click on that, and it'll give you the basics that you need to know as a consumer when locking in your interest rate. And that's it for now, guys. If you have any questions, I'm always here for you. Take care. Bye-bye.